The other thing I would say is that the 2-year yield is almost back up to 5%. And I think what that will do is cause a recession in the US. And maybe that's why Yellen went to China, because she's going to use the China card for the public, for the election. She's going to say, well, we're in a recession because China's dumping all these cheap goods. Thursday, April 11th, 2024, Maneko 64, home of alternative economics and contrarian views. So we're going to look at China today and how they said no to Yellen's advice of stimulus checks and deficit spending. Yes, it's ironic that the Chinese don't want a lesson from Yellen. The Chinese are saying we want to have actually market capitalism. And I know China is a mixed system. So we're going to cover that. And then we're going to look at the gold and silver market and also the miners and ways that I think people might want to profit from it. Not from trading physical gold and silver, because I don't think you should do that, but the mining stocks, that is. But before we go any further, you might be wondering where I was. Well, for those of you who have followed me for a while, you knew that I was supposed to have gone for heart surgery on March 15th. That unfortunately was canceled. And I was called up last week to go. A very short notice. So I posted my last video, I think it was Wednesday. Yeah, the day I had to go into hospital. And I posted 2 other interviews I did in other channels the day of my surgery and the day after my surgery. So I haven't posted in a while. For those of you who are watching me for the first time, I've been posting videos virtually every day since late 2015. So I'm aware that some of you were concerned. And yeah, I'm sorry that I had to take a hiatus for what the surgeon told me was a very rare congenital heart problem that gets worse the older you get. That's all it was. The risks were very minimal, but heart surgery is serious. So I got back home yesterday afternoon. So that it's really nice being home. So it's interesting that last week I went into hospital on Wednesday. And yeah, I was there for a while until they put me in a ward. And I was following things. I saw that gold was doing well. And then when I got up Friday, actually, really, I was a bit compos mentis. I saw a report that China had gone to, or Yellen had gone to China. A friend of mine sent me a message and I said, well, she's probably begging the Chinese for something. And I thought, that's interesting that she was in China. And I was reading about that yesterday. And she was there with some Treasury officials, I guess, for almost a week. So she went pretty much around the same time I was disabled. And I think she got back on Tuesday to the United States. And it doesn't look like it went very well. The FT reports here yesterday how Janet Yellen struggled to move the needle on U.S.-China trade. Treasury Secretary's week-long trip yields little progress on disagreements over how Beijing could counter slowdown. So before I look into some of the comments here in this article, I would say maybe the United States needs to be a bit more diplomatic with countries like China. And why is that? Am I pro-Chinese? Am I in the CCP? No. I'm not an expert in Chinese history, but I do know that from around 1850 to 1950, China had a century of humiliation where the Chinese state was very weak. There's a lot of instability, civil war, and the Western countries, Britain mainly, and others controlled really China and wrecked, kept it weak. And so you need to understand that. To think that you can go to China, especially if you are the U.S. Treasury Secretary, and tell them how they should run their economy, I think it shows just ignorance or hubris. I think it shows both, really. And we think that China, of course, is a communist country. Yeah, I mean, officially they are, but it's a very mixed economy. Am I one who believes in state interference in the economy? No. But over the last 30 years, I think every country in the world can take a leaf out of the Chinese book. The amount of people they've brought out of poverty, the amount of infrastructure they built, I mean, it's amazing. I don't think it's ever been done in history in that short amount of time. So that's what I would say about that. Maybe Miss Yellen should have gone there to get advice from the Chinese, not the other way. So I'm not surprised that it didn't work out. And right now there's a lot of concern about what Keynes in the West call dumping of cheap goods, which in my book would be a good thing. The cheaper things are, the better. If you can buy a nice electric Chinese car for 25,000 pounds, I would say that's better than buying a Tesla for 45. But yes, so that seems to be the problem. The Chinese punched back. They said, well, your Inflation Reduction Act also provides for a lot of help from the government for private companies. But the thing that really made me laugh, kind of, was these comments here. I'm trying to find it for you. Oh, here we go. The Treasury Department wants China, whose economy is flagging, to follow the Western playbook. What I would say to that, China followed the Western playbook after the '08 crisis by pumping the real estate market, and they're paying for it now. So why should they follow a Western playbook now? Anyway, let's continue. And address bouts of economic weakness with demand-side policies, such as tax cuts and stimulus checks to boost consumer spending. While Yellen said discussions with her opposite number, Li Fang, were constructive and detailed, there's little indication that the Chinese vice premier's boss, President Xi Jinping, who has openly dismissed welfarism, will heed the discussion. Instead, Xi is espousing new quality productive forces, moving up the value chain into advanced manufacturing, raising fears that this will lead to overinvestment and capacity in industries traditionally favored by the West. So, this is quite amazing, I think, because, and again, I'm not defending the Chinese, I'm just looking at the facts. In the West, and here in the UK included, all they want is deficit spending, more wealth, bigger welfare state. And China said, no, we don't want that. We want our people to be productive. And I think that's really interesting. And that's why I said that China gave like a market economy lesson to Yellen, or is giving it to the West. Notice I didn't say free market, because China is not a total free market, but neither are we. So that's how I see it. Let's skip now to gold and silver. And yes, gold and silver are doing very well. Why now? Well, I think part of the fundamentals is because of this schism. China wants to be productive. They want to have sound money, savings, because you can only invest if you have savings, real savings. And the Austrians always point to that. And I'm not saying the Chinese are Austrians, but they're taking the best part of different systems. In the West, we don't believe in savings. We believe in debt and putting people in debt, borrowing to invest. And I think that's what gold is telling us now. And silver has caught up really well. When I was pretty much unable to look at things very closely. But I think what it's saying is that the West, the dollar, we're focusing on this mythical wealth, which is borrowed out of thin air. And I think I spoke recently about the fact that interest payments on the U.S. national debt are going to be approaching almost 1.6 trillion by the end of this year. So it's getting out of hand. And we saw yesterday, I think it was, CPI came out and it was higher than expected. So prices are not going down. This morning or overnight, we've actually seen Chinese CPI. And this is what the West is complaining about. Chinese CPI was negative. But I would say I'd rather have a negative 1% CPI than a 4% CPI. It's only Keynesians who are scared of lower prices. They don't believe in the market economy. They believe governments should be always interfering. And I'm not saying the Chinese don't do that, but at least they recognize that production is important. And yeah, so that's why I see gold going up. The other reason why I see and why gold is going up is the technicals. This long-term chart here that you see just shows how we're just in the beginning. Yes, there's going to be a lot of volatility. And I've spoken about this a few years ago, that in the next bull market, and I think we're right in the beginning of it, you're going to have to hold on to the bull or else you're going to get thrown off. And as I said, it's very encouraging. I think silver and gold did relatively well yesterday, actually. Those numbers normally would have brought, I think it would have brought gold down below 2,300 and silver was almost unchanged. So the technicals are still good. But as I said earlier, we can talk a little bit about trading. And I don't think physical silver or gold are for trading. They're for your bank. There's the old saying from Jim Sinclair that you should be your own central bank. And that's what it's for. It's for liquidity. Trading stocks is very speculative. It's a different game. And the reason why I say that is because I was involved in the bond and the stock markets. That was my profession as a government bond broker. So even then, it's very psychologically difficult, but I'm sure some of you want to speculate, and there's nothing wrong with speculating as long as you know the risks. But one thing I would say, it needs very close attention. It's like a business. It's not something to do lightly. If I hadn't learned about trading and markets from my profession, I probably wouldn't get involved. But if you do want to get involved, I always recommend books. I don't recommend adverts you see online of people showing you how to trade. I think that's the worst thing you can do. So what are the good books, in my opinion, that I've read in the past? Well, there's one that I unfortunately don't have anymore. It's a classic. It's Reminiscences of a Stock Operator by Edwin Lefebvre. And it's basically about Jesse Livermore. The other one is Market Wizards. There's also a new Market Wizards. I think it's by Richard Dennis. Those three. And then the other one about Jesse Livermore is this one here, which I still have. Jesse Livermore, World's Greatest Stock Trader by Richard Smitten. Highly recommend it. It's a great book, even if you're not a trader, if you don't want to trade in the stock market. It's a good book about an incredible individual. And just to let you know, he was the best in speculation, but he lost many fortunes many times over. But he did well, of course. And the other one is this one here, Sun Tzu's Art of War for Traders and Investors. There you go. And one last thing about trading. And again, this is about the miners or any other kind of stock or sector. You need a target because sometimes, yeah, you get in and you're doing really well and you get greedy and you keep your position and you don't get out, and then your profits turn and they turn into losses, and then you keep waiting and it never comes back. I remember one of the traders at the small Swiss bank that I started at in the early 90s, he told me the most important thing about trading is having, a level to get out, to take your profit. It's very, trading is something that you need discipline and, psychology is a big part of it. So that's what I would say. I'm not telling you to trade or do anything. I'm just saying this because a lot of you ask me, how can I profit from silver going up? How can I buy silver stocks? Well, I'm not here to hold your hand 100, all the time. You can do your own research. If I can do it, you can do it. And so let's quickly look at the markets then. It's 8:47 a.m. London time. Oh yeah, Rudy's here. He behaved well while I was away. It was probably good for him. My wife is tougher on him, so he's more disciplined now. So spot gold is at 23.39. It's up $4. High's been 47, low 29. Silver's at 27.92. It's down about a cent. High's been 28.08 and the low 27.73. And with those numbers yesterday and the fact that the 2-year yield went up like 18 basis points and the 10-year 14 basis points. The fact that gold and silver are holding here, I think is quite encouraging. Oh, the other thing I would say is that the 2-year yield is almost back up to 5%. And I think what that will do is cause a recession in the US. And maybe that's why Yellen went to China, because she's going to use the China card for the public, for the election. She's going to say, well, we're in a recession because China's dumping all these cheap goods. I think that's what it's going to be. But the reason there will be a recession is because you can't keep, you got to defend the dollar right now. And people, you might think the dollar was strong yesterday, but it's all relative. They're all the fiat currencies are going to drop versus gold and silver. So I would avoid that FX game, but that's up to you, of course. What about the stock market? I think we got hit yesterday, about a percent down. Right now, we're pretty much unchanged, so I won't go over it. The currencies as well are pretty quiet. The dollar is down slightly versus the yuan at 7.25. WTI crude, that's up 0.25%, 85.85. Brent crude, that's up 0.25% at 90.25. So commodities are still doing really well. The CRB chart's looking very good. So this is not just gold and silver. I think gold and silver are leading the way. High-grade copper is pretty much unchanged at 4.30. And let's quickly look at the 10-year yield. Yeah, that's at 4.57 almost. So yeah, that's way above that important 4.33 level. And I saw a headline now saying that UBS thinks the Fed will cut in September instead of June. I actually think the Fed should be hiking rates because there's still too much liquidity and the CPI is still too high. Maybe that's the other reason why people are jumping onto commodities and also gold and silver. So, yeah, it's really nice to be back, and hopefully my voice will improve over the next week or two. And with that, I'm going to wish you all a very good day. Take care. Bye.